Hey, good morning, everybody. So this is going to be the watch list for Monday, March 10th. And what I want to do is just talk a little bit about risk management before we get into the economic calendar. So first and foremost, you have clearly seen volatility go up exponentially in nature. The VIX was trading around, 14, 15 for the last several weeks, and now we're at 20, 25, 27. And so when volatility is going up, what you want to do is make sure that you are taking your risk element down. So if you're accustomed to trading five contracts, maybe just trade two contracts. If you trade 10, take it down to three. If you're trading 30, take it down to 10. So I would say put on a position size anywhere from a third to a half of what you're normally comfortable in taking. Reason being is contract premiums are moving exponentially in nature to the upside and to the downside. The other thing I would recommend is that you probably don't trade beyond the first 1 hour of the market open. What I have noticed is as we get past that 1 hour time frame and we get news feeds or news data drops that are coming out of the White House or changes in tariffs or in administrative policy, then the market is rocketing higher or dramatically dropping lower, which will just cause you to stop out of a trade with a loss. So I think what we want to do is just be very protective of our capital during this environment, and let's let the dust settle. So a couple of things that we're going to want to watch for next week is Monday. We don't have any economic news, but I will tell you one thing to keep an eye on, and we'll take a look at it when we get to the charts is that the administration on Friday afternoon said that they're going to be imposing a 250% tariff on Canada for lumber and dairy products. So, over the weekend, the Home Builders Association said if tariffs on lumber were just 25%, you could expect the average home in the United States to go up about $10,000. So if the tariff's going to be 250%, then just do the math, right? The home price, the average home price is going to go up 200 to 250 grand. Now, if the average home is, 600,000 and now it's going to go to 800 or 850,000 because the material costs are so much higher, what is that going to do to housing? It's going to kill it, right? Nobody's going to be buying homes. Not to mention that mortgage rates are still above 7.5, right around 8%. So we're going to look at some of the home builders as a possible catalyst play. The other thing I would also say is maybe get away from the ETFs trading this week, spying QQQ and go into some of the individual names, which is why I'm going to list about a dozen of them here for us to take a look at. Tuesday, we're going to want to see what the optimism index is as well as job openings. So we did see Jerome Powell talk on Friday about the fact that he is, still in a wait and see mode as to what's going to happen with inflation. But we'll get a sense of that on Wednesday with our consumer price index, our CPI core, and our year over year numbers to see is inflation starting to tick higher or is it moderating? We know the monthly US federal budget isn't getting any better. So that, I wouldn't worry about that being a market mover one way or the other. That's kind of why Doge is in place with Elon Musk, trying to figure out how to come up with cost savings from the US federal spending and the overall government to maybe downsize it, right size it, however you want to look at it, and then take that additional savings and pay down the US deficit. Then on Thursday, we're going to have another important day of jobless claims, and then we have our producer price index, core PPI, PPI year over year, and the like. So consumer CPI is a consumer price index saying, is the consumer paying more for goods and services year over year? The producer price index is actually telling you, are producers having to spend more money to manufacture the goods and services that the consumers are consuming? So that's how those work in tandem, but are yet independent of one another. And then finally, consumer sentiment overall on Friday, we'll get a read. Now, I will tell you that the last read was supposed to be down 2 points, and it actually dropped by 8 points. So I can only imagine with the amount of uncertainty that there is within the market and the overall economy and what people are seeing on the news media forums that there's going to probably be some apprehension and concern, not necessarily what we're doing as a country, but more importantly, how we're going about it. So with that, let's take a look at some of the individual names. I'm going to start with SPY. You will note that I have added a bunch of levels down here at the bottom, which are a consolidation from last August, where we were in this chop zone here. So when I post my levels every single morning, you will now start to see some more downside pricing in the event that we get there. Now, we did get a V-shaped recovery on Friday, and that was 100% attributed to Jerome Powell's news conference that he did. And he was doing Q&A and basically saying that while we're still, steadfast on maintaining inflation and holding the job market, the overall US economy up until now has been strong. So the market really liked to hear that stabilization of news from the FOMC, but then also where we were anticipating possibly one rate cut this year, they are now pricing in 3 rate cuts. So these are my price levels. What I want to watch and see is how do the futures open? Again, I think a lot of it is going to be based on tariffs. It's the only thing that's moving the markets right now. So we need to get above 574.90 to go long. If we stay below, my downside target would be 571.41. Let's take a look at where we're at. We're pretty much at an equilibrium. So that means we're going to probably have some chop on the market open unless some news drops overnight between now and the opening bell. Okay, so again, I'll see you guys at 6 o'clock tomorrow morning, and we'll see directionally where the futures are headed. With QQQ, again, we bounced mid-level. We didn't get down to the very lows here, which is fine. That can happen from time to time, right? This was a news catalyst where the market was just in a free fall to the downside, and we probably would have hit 478 had Jerome not come on midday and started talking about the Fed's position, okay, in monetary policy. So we're going to want to wait to get down to 487.65 to go long, get up to 500 for a possible put, or a break below. Again, we are in more overall supply than demand. So you'll see right here, my 487.65 lines up great on a 1-month basis. I'd love to see us push down on the open and then to go ahead and take this higher. Let's take a look at a couple of the individual names. So Apple was actually relatively strong pretty much all week. So while the market was, in a lot of free fall turmoil, Apple didn't move much. It only moved in a $10 range, down from 230, right? On Friday, it hit 230 last Friday, and then this Friday up to 240. And we're just kind of oscillating back and forth. So Apple would be a good name for you to trade if you want to stay away from volatility, right? I would like to see us come down to 237.49 and go higher, or come up to 240 and reject it to the downside. You can see we rejected it here. The pre-market, we were using it as support. But if we can get above it, then there could be some opportunity to actually go long. Let's look at another name that was resoundingly strong. Huge again, V-shaped recovery was going to be Meta. Meta was recently just trading as high as what? $740. So we got, quite the haircut here, 10% to the downside. And can we build some momentum? So for this one, I really like 622, that if we can hold this to take a call trade up to 636 and then up to 647. But if we fail it on more negative news, back down here to 607. Because you'll note we don't have any buyers or sellers in between the two zones. So the likelihood for it to gravitate lower is going to be high. Google, interestingly enough, was kind of our outlier for the week. It was actually trending higher all week long. So while the market was selling off, Google made a low on Tuesday. Wednesday was higher. Thursday was a higher low. And then Friday was a higher low. So this one, though, keeps rejecting at this 174.69 right here. So you can see we used it as support last Tuesday and then reject it, reject it, reject it. I want to see, what are we going to do? Are we going to come up here and reject it again? Could be a great put trade, or come down here and bounce it. You'll see how they held it as support, resistance, support, resistance, support, back and forth, right? So these are two levels that I really like that you should be watching for Google. Let's take a look at Microsoft. Microsoft actually last weekend had a huge email issue with their software, which impacted the market to the downside, but then clearly Again, we recovered on Tuesday. And then Tuesday, again, Microsoft and Google were in the uptrend. Higher low, higher low. We got a higher low. And then on Friday, interestingly enough, we did not get that higher low. So they were pushing it up to 400. Again, I want to see, do we hold 392.53 for a push to 400, or do we fail below to go lower? 389 would be my first target, which is where they were bouncing it back here a week ago Friday. Then they were bouncing it here on Tuesday and then also on Wednesday. So again, this I would look for possibly a bounce or a put to go lower. I like to look at Amazon. Amazon was really the weakest of all of them the entire week. I mean, they just kept selling this thing off over and over and over again. So you can see with Amazon, we had a lower high, lower high, lower high, lower high, lower high. I mean, this thing is clearly in a downtrend. And these are things that we're going to want to watch in order to say, will it reverse to the upside? And if so, when, right? So let's just go ahead and we'll draw a trend line here. And you can see how it is possibly going to reject on the open to go lower. We will need to want to get above the trend line and then get above the price level of $200, kind of that empirical number that's going to resonate, right? But you can see we got 1, 2, 3 solid touch points. They did break above it for a moment, but then push lower. But this is also the power of having this supply and demand indicator. So if you're not using this, I'm telling you, you are really missing out on seeing where are the buyers and where are the sellers. I did adjust my gap fill to the downside. We pushed into the gap on the daily. So this is the new daily gap. But if we start to have weakness, there's only 45 minutes of buyers here. And then I think we're heading down to 188. And then that will be another great area to potentially take a bounce. Let's look at NVIDIA. So NVIDIA, again, the darling of Wall Street, not anymore, right? I mean, I think this thing could clearly recover, but it is very weak. And when the chip sector is weak, it usually stays weak. It's not one of those that will recover very, very quickly based upon overall sentiment. Now, we also have some issues with the CHIPS Act coming out of the administration where it needs to be dissolved or abolished. So that could impact the overall sector as a whole. But what I would like to see us do here is come back down to this 109 level to take some calls. We have a fair amount of resistance up here at the 2-hour, little bit of supply forming, but that's in the after night and after hours, and that's just not really well to be counted on. So these are my price levels: 122, 116, 114, 109. If we can get above this 114, 115, I think we got a clear shot back up here into the 120s, probably by the end of the week, but we'll see how that plays out. I do want to take a look at Tesla. So had quite a bit of weakness here. The stock is down literally 45% in the past 90 days. We're at a balance between buyers and sellers. So this one, what I like to do is I typically like to take calls on Tesla and not puts. I'm not a fan of shorting Tesla because it can reverse at any moment's notice, and you literally have zero warning. And so therefore, my preference to trade this directionally is calls. I'd like to see us get above 260, 268 with some strength in momentum to the upside. Now, again, we are in a very severe downtrend environment, but I think like what happened here back on Tuesday is you could get a really good pop from 260 all the way up to the 280s, right? I mean, that's a nice move. I really like to see that, but I want to see us get above this. If not, and we head lower, there is a gap fill down here to the bottom. So let's watch the overall market momentum. But on a 1-hour time frame, clearly you can see that the MACD is going to the upside. I want to take a look at, excuse me, a couple of the banks. Have definitely been thrown out, maybe with the bathwater. SoFi acts more like a tech stock, but this was just trading at $18 a share, you guys. And then they sold it off hard. So we were at a buy level of 1177. We almost hit it on Friday before they pushed this higher. But I think this is probably a great one to just pick up some equity, right? Buy some shares, stick them away. Don't look at them for 3 to 6 months. And, if this thing goes back to $18 a share, you just got a, 40, 45% ROI. Now, if we break below $11, I think there's only about 10% to the downside. So, it's not that egregious unless the entire economy just dumps and we're in for a full market correction. But you can see that they were using this peak here as overall resistance that then turned to support in November. And then it was off to the races. So we are at a really good inflection point. Though ideally, if we come back down to $10 a share, that's like an insane buy because that's where the stock actually launched its IPO back here in 2021. So a lot of movement up, right? We're nowhere near these $24 highs that we've seen in the past, but I also don't think that it's as awful as everybody's making this out to be. Okay. So that's what I would watch. The other one that got an upgrade was Bank of America. Interesting. And we had a gap fill here, but obviously that gap has been filled now to the downside, so that was also removed. But we are bouncing off of a key level here at 4102. I think this is one where, again, I would look for us to play some calls. Now, calls in bank stocks move very, very slow. So you have to be very patient with those. Obviously, do Friday expiration, maybe a target of 42 or $43. Don't be going 44, 46, 47. With a lot of the bank options, you'll do at the money, sometimes in the money. So if we get a break below $41 on weakness, then clearly you can see how we were in this channel here between 41 and 38, but I really like the price where we're at right here. One of the other things I do want to talk about is the home builders. So if we do impose 25% tariffs on Canada, I think that there could be some room to the downside for the home builders. I do have an alert set to say, do we cross below my price level of 158? You'll see that on a higher time frame, really a 4 hour, that we are at this trend line from all the way up here, 112, 108. Now we're hitting it here. Do we hold this 101 to go higher? But again, I'd be playing this on negative news sentiment. Now, if we can hold this to the upside and break above the trend line, right, we can set an alert here as well if we wanted to on this horizontal ray. So all you do is right click, and then you can go ahead and set wherever you want your price target to be at an alert right here. And if we extend above that, it will notify me to the upside. And then I have an alert to the downside. So those could be a couple good ones. And then lastly, watch the energy stocks. I think this ExxonMobil is one that trades within a pretty narrow range that you could pretty much bank on, right? When it gets to 108, it goes up to 110, then it comes down to 108, goes to 110, comes to 108, goes to 110, 108, 110, right? If we break above 110, then you get a little bit of movement to the upside to 112, not a ton, but we are now holding this 108 level again. So if we get a little bit of weakness in oil on Monday, maybe possibly look for a call trade at 108.18 with some 110 calls. So those are the things I'm watching, but just as always, when volatility is high, sometimes it's just better to sit out and watch, be overly patient. Again, size down on your positions, take less trades, and be very, very prudent on your risk management and not letting a green trade go red. So with that, I hope you have a phenomenal weekend, and I will see you all tomorrow morning at 6 a.m. to trade the market live. Take care, everybody.